Hello and welcome to another video of Market Vision from Investment Advisors. Today we bring you a detailed analysis of the market movements covering Indian equities, sectoral performances and global trends. Let's dive in. Indian benchmark indices closed in green today, extending their gains as investor sentiment remained positive. Nifty 50 rose 41.7 points, around 0.17%, closing at a strong level. Sensex as well gained 187 points, around 0.24%, reflecting strong broad-based buying interest. The market breadth was positive, with mid-caps and small caps also participating in the rally. The consistent upward movement suggests that investors are positive and optimistic about domestic economic growth and corporate earnings. Sectoral indices saw strong buying interest. Realty stocks surged 2.42% and were among the top performers today. All this was driven by strong demand expected in the housing sector. FMCG stocks as well gained 1.89% as rural demand picks up and companies report stable earnings. Healthcare stocks were up 0.8% as we saw steady buying amid global stability in the sector. Banking stocks as well rose. Both PSU and private banks contributed to the rally and were up by around 0.75%. All this was because there was improving credit growth and stable asset quality supporting the sector. This broad-based sectoral performances indicates healthy market participation and a bullish undertone. Global markets as well witnessed a rebound after recent volatility. Asian markets were mixed but remained positive. Nikkei was down 0.17%, whereas Shanghai was up 0.25% and Hang Seng rose roughly around 0.78%. European markets were all in green. DAX and CAC were up 0.5% and FTSE was up 0.67%. US markets rallied strongly. Dow Jones, S&P 500 and Nasdaq all surged nearly 2%. This was driven by easing inflation concerns and strong corporate earnings. The global rebound in the positive is a positive signal for Indian markets, as foreign institutional investors may increase their exposure to emerging markets like India. Now let's analyze how the markets are expected to perform tomorrow based on the chart as well as open interest. So we are in the Nifty 50 chart. So as you could see, today we approached the previous resistance of 24,200 odd levels. We just crossed that and then from there we started seeing selling pressure that had come at the higher levels. So that is when there is a doji kind of pattern that we had seen. Now whenever we see doji kind of pattern, it signals either the rebound as a continuation or as a reversal. But considering the fact that overall the global markets have been positive and there is a good strong investor sentiment in the Indian indices, so we might continue the rally from here on. So the immediate resistance for Nifty is going to be roughly around 24,800 odd levels. So since we had discussed yesterday as well as previously, from here on it is going to be little bit difficult for Nifty to approach and go beyond 24,800 odd levels. So till then we might see a consolidation kind of phase for at least 2 to 3 weeks on Nifty. So as long as Nifty sustains the previous support, that is 23,800 odd levels, which was all this while acting as a strong resistance. Once we swiftly moved above that, now this would act as the immediate support for us. As long as Nifty is trading in this range of 23,800 to 24,800 odd levels, we might consider Nifty in a safe zone. So the moment Nifty starts falling below 23,800 odd levels, then we have to be cautious and cut down all our long positions. So till the time it holds 23,800, we are in safe zone. And as long as it is trading below 24,800 odd levels, it will consolidate. The moment it starts trading above 24,800 odd levels, since there is no immediate resistance, because 25,200 odd levels is just 400 points away, the strong resistance of 24,800 from where we had seen the huge dip coming in, right? So we might maybe trade range bound for another like 1 or 2 odd weeks, at least by the end of this month, expiry. And then maybe in the May month we might trade or start trading about 24,800 odd levels. So for next 2 days, for the Nifty expiry, we might trade range bound somewhere within 24,000 levels to 24,500 odd levels, or if the positive sentiments continue to rise, we might approach towards 24,800 odd levels. But beyond that seems difficult, at least for this expiry, given the fact that there are only 2 trading sessions that are left. So overall, there is a positive sentiment across all the major indices, and Nifty has been, rallying quite good, and we might continue to see this upward movement rally to further be there at least until 24,800 odd levels. So as we discussed, we expect the range bound scenario to continue for another 2 weeks, as long as Nifty trades between 24,800 to 23,800 odd levels. There is a 1,000 point range in which we expect at least 2 weeks the market to sustain. Now let's see what the open interest says. So as we discussed, 24,000 is a strong support. So there have been good put writers who have been holding their positions here. But the good point here is at every 100 point level above 24,000, we have been seeing good increase in the put writing too. So this indicates that as the Nifty inches up beyond 24,200 odd levels, we will see a strong put open interest that is expected to emerge. So as long as this continues, then our uh, falling down towards the lower levels on Nifty is difficult. But on the other hand, if you look at the open interest on the call side, at immediately 24,200 levels, we see a strong open interest position additions. At every 100 points, again, we see open interest additions being built up. Now, this says that Nifty may not head above 24,500 levels, at least for this 24th April expiry, since there are only 2 days and we are at 24,167 odd levels. So going beyond 24,500 levels in just 2 days expiry seems difficult, provided if there is no swift movement on the monthly expiry, that is on 24th April. So if we see a sudden rally further, then it might smoothly cross 24,500 levels. And since we do not have any strong resistance until 25,000 levels, we might easily move above or towards 24,800 odd levels, provided such kind of strong momentum that comes in. But in 2 days expiry, it seems to be quite difficult. So 350 odd points is where we might expect the market to move up. So overall, we might trade in the range of 24,000 to 24,500 odd levels until the 24th weekly expiry. So now, if you look at the PCR, it is 1.1 overall, which is quite positive, and 0.9 at the money. So on both sides we see it is positive, so we might continue the uptrend at least until 24,500 odd levels. Now let's talk from the perspective of Sensex. So Sensex as well had rallied, and then we see a doji kind of pattern because there was immediate sell off that was seen at 79,800 odd levels. So previously we had discussed that 80,000 to 79,800 odd levels is what was the previous resistance. From there, where we had swiftly seen a downfall of roughly around 4,000 odd points, right? So this is going to remain crucial until we strongly close above 80,000 odd levels. So till then we might see some range bound kind of trades. And since we have concluded the weekly expiry today, and yesterday itself we had discussed that today being the Sensex expiry, we may not expect any strong volatility to be there. So we had clearly mentioned yesterday that it is going to be quite calm, and the same had been seen. So Sensex just traded in the range of 300 odd points today. However, our expectation was that the expiry could be below 79,400 to 500 odd levels. However, it was just tad above 79,500 to 600 odd levels. So, considering that there was a range bound kind of trade today because of expiry, we might again start to see from tomorrow itself good bounce back from here, and then Sensex might start moving on the upper side. So as long as 82,000 levels odd are maintained, or Sensex trades below these levels, then we might see a big range bound kind of scenarios uh, that are expected to be there for the next upcoming 2 weeks. So we might trade in the range of 78,800 odd levels to 82,000 levels. So this is the range where we expect the Sensex to trade for at least 2 weeks as part of consolidation, because we have already seen a big rally coming in last 8 or 9 odd trading sessions. So we expect that it might trade a range bound for another 2,000 points, and then from there, based on the overall world markets and the quarterly results sentiment, if that remains overall positive on the corporate earnings side, then we might further start moving upwards in the month of end of May or start of June month, and would inch towards moving to 52 week highs. So beyond 82,000 levels, we do not have any strong resistance coming in. So we might immediately start moving up the same way how we rallied roughly around 7 odd thousand points from here. Same way we would rally once Sensex crosses beyond 82,000 odd levels, as there is no immediate resistance available. So now let's see from the perspective of open interest. So we see since there was a weekly expiry, so for 29th April expiry, we are yet to see the open interest built up positions. So here, if you see, there is already a, strong support that comes in because of the put writing at 79,500 odd levels, and similarly at 79,600 levels. So as long as Sensex sustains these levels, then it might easily be headed towards 80,000 odd levels. So it is just 400 points from here for it to approach 80,000. We see already the call open interest built up positions here, roughly around 40,000 to 45,000 odd levels. Or positions were built up in just a single day. So and at every 500 odd points, we see a strong open interest additions that are being seen. So we are not sure about this big bar of the put writing positions, whether it is a glitch or these positions are real. So we have to wait for another day's time to see and understand if these are valid. So assuming that at all the higher levels we are going to see a good open interest positions that are expected to build up on the call writing side. So call writers surely are going to push hard and act as resistance. However, yes, until 80,000, it is easy to move forward. Beyond that, it seems to be difficult. So we might see some consolidation happening at the higher levels in the range of 79,000 to 82,000 odd levels. So as long as 79,500 is sustained, we should remain positive and trade all the long positions in Sensex. So overall, if you see at PCR, it is zero point 0.6 because the positions are yet to be built, and at the money it is 0.98 because we see huge positions that are there in this zone of 300 to 400 odd points itself. So overall, Sensex is strong, and then we might see a rally further up, and 80,000 is going to be the crucial mark. Beyond that, we might see a swift movement towards 82,000, and then we can start seeing to consolidate from there. Now, looking at the Bank Nifty. So Bank Nifty has already at each single day it is giving all-time high. So today as well it moved towards 56,000 odd levels, just 40%, 40 points down below the 56,000 odd levels. So there is no doubt a lot of positive sentiment in all the banking stocks, and no doubt that the banks have also been showing the good results and outperformance across their quarterly results. Now if you see, we have already crossed roughly around 1000 odd points about the previous 52-week high. So today at the higher levels, we have already seen a selling pressure that has come in for roughly around 300 points. So this zone we have to wait and watch. Is there a selling pressure that would emerge, or we might further see stronger buying zones coming in above 56,000 levels. So as the global markets have been trading positive, and our major indices like Nifty and Sensex have also been trading positive, so there is higher expectation for Bank Nifty to move up towards 56,500 to 57,000 odd levels in just 2 weeks kind of time frame. So we have the monthly expiry for Bank Nifty. So owing to that monthly expiry, we might see some volatility coming in the range of 56,500 odd levels to 55,000 levels, or maybe the previous resistance of 54,500. So as long as we sustain 54,500 levels and trade in the range of 56,500 to these levels, then we might consider that the overall monthly expiry is going to be kind of in a range bound kind of scenario. So overall, Bank Nifty is the strongest and positive. So any short trades would be not good. We might see big losses provided there is a swift rebound from these levels. So as long as 54,500 sustains, we are good to carry the long positions. Now let's look from the open interest perspective. So as we had seen at 59,960 odd levels, from there 55,960 odd levels, we had started to see good sell off coming in, right? And today as well, if you see, roughly around 30% of open interest additions had happened at 56,000 odd levels. So this might signify that it might sustain and put a lot of pressure until the monthly expiry, or if this crosses, then we might swiftly move towards 56,500 and 57,000 odd levels. But given the fact that we have only 2 days to expire, so we might not see a huge volatility coming in. And still, if you see, day by day we have been seeing some unwinding in the call positions at all the lower levels. However, still we see good positions are being held, and there is immediate support at 55,000 odd levels, which is the round figure again. So 600 point is what is the range. So overall we might trade in this 1,000 point range for the monthly expiry. At any point in time, if we cross below these two levels, then we might see a sudden breakdown or breakout at these levels. So since there is a positive momentum across the major indices and the broader indices, uh, we expect that bank nifty might sustain 55,000 levels until the 24th April expiry, which is just 2 days away. On the open interest, it is overall at 1.2, which is quite positive, and at the money is also 0.8, which is again positive. Lastly, on FINNIFTY has also been inching towards higher highs, and we have already crossed roughly around 1,600 to 1,700 odd points from its previous 52-week high. So as long as FINNIFTY trades above 26,400 odd levels, then that can be considered as a positive. The moment it starts dropping below 26,400 odd levels, we might see a sudden sharp downfall. Though the financial sector stocks have been performing well, and Finance being the Bajaj Finance and Finserv being the kings here, have been trading well. So as long as the major stocks in the FINNIFTY index are strong, we might not see a sudden downfall coming in. So any result announcements that are impacting and negative for the strong stocks, then that might start leading to a downfall in the FINNIFTY. So as long as each day's high is sustained and it moves further, we might continue to see newer highs coming in the FINNIFTY too. Now let's see from the perspective of open interest. So open interest, as we discussed even yesterday, is skewed. So here there is a lot of put additions that we are seeing at all the higher levels from 26,700 until 27,000 levels. So we might not see FINNIFTY crossing beyond 27,000 odd levels, which is just 350 points, 375 points away from the present levels. And on the lower side, we do not see any strong support. The big support is coming at 26,000 odd levels, and then there are small supports at every 100-point level. So there is kind of tug of war. So there are equal open interest positions built on put side at the lower levels. Similarly, on the higher side until 27, we see strong open interest positions being built. And in fact, if you see just yesterday, there have been good open interest positions at every 100 points that have been built. So this shows that there is going to be a strong tug of war kind of scenario, and whenever such scenarios happen, then we might see a range bound kind of trades coming in, and FINNIFTY will expire in a consolidated manner without much volatility coming in. So crucial levels to follow is 26,500 as acting as immediate support, and then 26,800 or 26,600 as the immediate resistance. So overall PCR it is 1.5, and then at the money it is 0.5, which is not that bullish. Lastly, on the FII and DII transactions. So FIIs on index futures are holding shorts, so 78,000 short positions are being held. On stock futures, they are quite bullish, and 17.49 lakh contracts are being held, so which is positive. On call options, they are holding long, 1.58 lakh contracts, and on put options again they are holding long, which means they are expecting the markets to fall down. So it is 1.61 lakh contracts. So net if you see on index options, FIIs are not determining or are indecisive. On the proprietary traders side, they are mildly long on index futures. They are mildly long on stock futures with 1.23 lakh contracts. On call options, they are short by 45,000 odd positions, and on put options, they are long, meaning to say they are holding the short positions, which suggests that overall they are going long on the indices. So as you could see, net positions, it is positive 1.2 lakh contracts. So DIIs are FIIs are indecisive, and proprietary traders are long. Now let's see from the perspective of retail traders or clients. So retail traders are long on index futures mildly, which does not make much difference. On stock futures, they are quite bullish and holding 17.41 lakh contracts. On call options, they are short 1.13 lakh contracts, and on put options, they are again short 58,150 2,000 contracts. So net if retail traders are holding shorts in the index options. So whenever the retail traders are against the overall trend, that would have a significant impact on them, and we would see a swift rally which might lead to a lot of losses to the retail traders. So today as well, we see all the global markets being positive. So it is expected that the gift nifty being already positive, we might also open positive tomorrow. So on the cash market, DIIs have been sellers to the tune of 8,886 crores, and this is clearly been absorbed by FIIs. So they are holding positive and have absorbed the overall selling pressure from the DIIs. And today in the cash markets, they have taken positions to the extent of 1,290 crores. So as long as FIIs remain positive, because they have been net sellers for a very long time, and huge positions have been sold off. So now seems to be like they are accumulating the positions here. So we might see upward rally to continue in the major indices and in Indian markets overall. So the key takeaways for tomorrow and for the subsequent weeks is: Indian markets remain resilient with sustained buying across the sectors. Global recovery support might come in, which may lead to further inflows into the Indian equities. Now, considering that US Fed policy meeting and quarterly earnings season around the corner, markets may see some volatility. However, the overall trend is expected to remain positive. So that's it for today. So stay tuned to the Investment Advisors for more updates and for each day's expert analysis. Please, if you like this video, do like, share, and subscribe to our channel for our daily market analysis and investment strategies. Till then, thank you and happy